Hey guys, it's Nick, and in this video, I'm going to do an update on what's going on with Evergrande and Fantasia now that the Chinese stock market is finally open for Friday. The story is so complicated that it's actually making me dizzy, and I tripped and busted my head on a shelf. So thanks, Evergrande. So there's some new information about Fantasia that they actually had the money to pay this debt back, and they didn't on purpose. Evergrande is supposedly hiding more debt in off-balance sheet entities. And there's the possibility that this whole problem with Evergrande is because of the Jackie Chan curse. Yes, that's right. So stay tuned and I'll explain all of this. The market in Shanghai is up about 1.36%, but nothing has really changed for Evergrande. So the holders of the Evergrande-linked Jumbo Fortune bond have still not been paid. So this $260 million bond was due October 3rd to pay the complete principal. The note matured and people still have not been paid. And it says Evergrande did not respond to requests for comment regarding its debt obligations during a holiday in China. And the next step would be to send a notice to Evergrande and its lawyers to formally request it honor its guarantee obligation, the people said. And non-payment of the bond's principal may constitute a default as the note has no grace period, although 5 business days would be allowed if the failure to pay were due to administrative or technical error, according to people familiar with the matter. And separately, some holders of dollar bonds due in recent weeks have said they didn't receive interest due, though those notes have a 30-day grace period. Now, Fantasia Holdings, which ranks 64th in China's real estate industry, it's much smaller than Evergrande. It has only a tenth of the revenue, and its debt is only $12.9 billion versus Evergrande's $300 billion. Yet they failed to make a $206 million bond payment on October 4th, which also sent the markets tumbling. But here's the crazy part. Fantasia could have repaid the note, but chose not to. As a result, it opened a Pandora's box of financial nastiness. So as of June, Fantasia had $4.2 billion. And in late August, it claimed it had 10 billion won, or about $1.5 billion. And in early September, it repurchased 6 million worth of bonds, claiming good liquidity after the open market operations. And because of that, this is what happened to their $300 million bond due this December. It tumbled from like around 100 to like 20. So Fantasia has been trying to sell some assets to get cash, and last week Country Garden Services Holdings agreed to buy its property management unit for 3.3 billion won, which is around $500 million. And so Fantasia's ability to repay this month's bond was never in doubt. So on the day that it decided not to pay off the $206 million bond, it tore up another contract. So for the Country Garden acquisition deal, Fantasia had received a short-term bridge loan worth 700 million won, or about $120 million on September 30th. So it had the money, but decided not to repay it on Monday when it was due. So is there a method to their madness? And it says from a strategic viewpoint, the company is playing a good game. A series of top-down government policies to rein in debt and control prices have turned property development into a money-losing business. So with no hope of economic recovery, Fantasia has no incentive to honor its bond obligations. That should scare you if you have any bonds in Chinese properties companies. And as of 2020 year-end, dollar-denominated bonds accounted for 62% of the company's total debt. So by getting out of all of them, Fantasia satisfies Beijing's edict against crossing the 3 red lines against excessive corporate debt with relative ease. And so being the first one to break their kind of honor code of bond issuance, Fantasia is now forcing investors in other developers to consider selling all their holdings. So if you're an investor in these bonds, you have to worry about not only companies not being able to pay the bonds, but also companies that are able to pay the bonds but choose to hold on to the money to weather the storm coming up in the property market. And to add to the fear of the unknown of what other debt is hiding on the balance sheet of these companies, JP Morgan now came out with an article saying Evergrande and other Chinese property giants have sizable off-balance sheet debt. So JP Morgan estimated that troubled Chinese property giant Evergrande and many of its major rivals have billions of dollars worth of off-balance sheet debt that once added up ramp up their leverage ratios. And so they say this tactic is likely to have been used to help firms look like they were conforming with new borrowing cap rules introduced last year, but Evergrande's case looks the most extreme. And what they're talking about is China's famous 3 red lines that you should not cross. And they came out with these rules to reduce risk in the property sector. And so the 3 red lines they don't want these companies to cross is liability to asset ratio, excluding advance receipts of less than 70%, net gearing ratio of less than 100%. This is important. And cash to short-term debt ratio of more than 1x. So if developers fail to meet 1, 2, or all 3 red lines, regulators would then place limits on the extent to which they can grow debt. So they estimate that Evergrande's net gearing, which is the debt to equity ratio, was at least 177% at the end of the first half of the year, instead of the 100% its accounts reported. And remember, that red line for net gearing is less than 100%. So they're right at the line officially, but maybe unofficially, they're 77% higher. And so they say it is possible that the real gearing could be even higher, as data on some off-balance sheet debt is not publicly available, saying the disguised debt added up to 55% of Evergrande's overall debt. And other major firms whose gearing levels were likely to be higher than formally reported include R&F Properties at 139 versus the 123 they report, and Sunac China Holdings at 138 versus 87% reported, and Country Garden at 76 versus 50% reported. So the more I read into this, the more I would want to stay away from Evergrande and any of these property companies that are doing all kinds of tricks to hide how much debt they actually have, just to play by the so-called rules that the Chinese government made last year. Now, the South China Morning Post had a series on Evergrande, and it's pretty detailed, and there's some pretty striking information here. And this is the most eye-opening thing that jumped out of the page to me. Evergrande's property portfolio had 144 billion won, or 22 billion worth of completed apartments, houses, commercial and retail spaces ready for sale as of June 30th. But Evergrande faces a mountain of short-term borrowings, from bank loans to offshore bonds totaling about 240 billion won, which is about $37 billion, due by the end of June 2022. So even if they sold all 22.3 billion worth of completed properties within the next year, they will still be short by $15 billion in how much they have to come up with to pay off these short-term borrowings by June 2022. And so here they say, even without considering any expenses for marketing or human resources, Evergrande would not have enough finished property projects in its entire portfolio to generate the cash that can meet its financial obligations. It may need to dig into family treasures within its 2.7 trillion won of total assets. So they have other assets they could potentially sell. But of course, when you're selling it at a fire sale, you get much less than you normally would get in good times. So they could potentially sell their EV unit, which never built a car, for $3.8 billion, and its stake in a soccer club, and maybe even the founder's $60 million super yacht. Now, this chart of Evergrande revenue by segment is really, really interesting. And they always say, stick with what you know or what you're good at. And look at what they're good at: property development. This is in billions of won, 302, 452. In 2020, it was 494. Now, these other categories, property services, 6.5. Investment property rental, 1.28. Other businesses, 4.87. So other businesses is less than 1% of their main bread and butter property development. So what are those other businesses? Now, you would think their other businesses are related to the property business, but they're not. And they include an electric vehicle maker that has yet to produce a car, a theme park operator that plans to open indoor-only outlets focused on Chinese culture in 15 cities, an online streaming platform, a wealth management business, and a 50% ownership in Guangzhou Evergrande FC, China's richest football team. The other half of the football team is owned by the Post's parent, Alibaba Group Holding. And there's one other business, which brings us to the so-called curse of Jackie Chan, and that's the food and drink business. As after a few years of employing action star Jackie Chan as a spokesman for its spring water brand, some online commentators in China have recently attributed Evergrande's problem to the Jackie Chan curse, as several brands he has promoted in the past have fallen on bad luck. And so the Jackie Chan curse seems to be believed by a lot of people here in the Taiwan news. They say Jackie Chan curse strikes Evergrande. Sales of Evergrande Spring tanked after Clown Prince of Kung Fu started plugging brand. And so this is Evergrande Spring and other companies that he has advertised for that have not done well. And so it says here, examples of companies that taken a major hit after hiring Chan include Gree Electric Food Company, Sinier, Bawang Shampoo, while firms that have gone belly up include California Fitness, Fenwang Cola, and I Do VCD. I don't even know what that is. Now, can you really blame Jackie Chan for Evergrande's spring water problems when it says, when the product first hit the market, it sold for 5 Chinese yuan, far higher than its established rival, Nangfu Spring, which sold for only 1 yuan. So they were selling it for 5 times more than the rival brand. And it says, when rumors spread that the water actually came from the same sources as its cheaper rivals, consumers' interest in the product dried up. And it says, despite eventually lowering the price to 1 yuan, the bottled water company lost 4 billion yuan from 2013 to 2015. It lost an additional 1.8 billion yuan in 2016, prompting Evergrande to cut its losses and dump the business. So if they were selling for 5 times more than this other water, which supposedly came from the same spring, and then they actually lowered it to the same price of 1 yuan, that kind of confirmed people's belief that the water was the same. And so if that was me, I would be pissed off that they were charging so much for the same water, and I wouldn't buy it either. Poor Jackie Chan getting caught up in this whole Evergrande thing. And one interesting data point to shine the light on the real estate bubble in China is the comparison to Japanese real estate prices in 1989, 1990, right before the bubble burst. Let's take a look at Japanese prices then and Chinese prices now. Okay, so according to Rushi Advanced Institute of Finance, condominium prices in the southern part of Shenzhen are now 57 times the average annual income and 55 times that of income in Beijing. Even at the height of Japan's bubble economy in 1990, Tokyo condos were 18 times the average annual income. So that's like saying if you make $100,000 in the US, you can afford somehow to buy a $5.7 million condo. That's not going to happen. And one more problem for Evergrande is their reputation after all of these protests that have been publicized all over the news. That makes it harder for them to sell any of their properties. And so here in this article, they say the sales environment was tough this year as regulators tightened their control on the sector, but Evergrande was still able to lure buyers with sharp discounts in the first half, according to Wang Bin, an agent in Huzhou. It was bad, but not dead. After those protest videos went viral online, I would be scolded by my clients if I introduced Evergrande projects to them, Wang said. The company might not fall yet, but its reputation is bankrupt already. So guys, the more I look into this, the worse it seems. You have Evergrande and these other property companies that have these huge debts. Then on top of it, you got China making these new rules that you can't step past. And so they do all these semi-legal things to hide this debt that they have to keep this machine going. But in all of this, their reputation is getting hit and the market is in a big bubble. And so all of those things together is not going to bode well for Evergrande or a lot of these other property firms in China that are probably doing the same thing, if not worse. So guys, if you like this video, hit the thumbs up and I'll see you in the next one. Thanks for watching.